Good morning students. Welcome to online session of accountancy. In previous class we have started the third chapter, that is theory base of accounting, accounting standards and the international financial reporting standards, also called IFRS. In that class we have studied about accounting, as principles of accounting are the general law or rule adopted by or proposed as a guide to action, a settled ground or basis of conduct or practice. This definition has been given by American Institute of Certified Public Accountants. After that, we have studied some features, necessity, and fundamental accounting assumptions or concepts. Now in today's class we are going to understand about accounting standards. Now as you all know, there are many business nowadays, and that business, earlier that business were running very smoothly and in a very small extent, but nowadays each and every kind of business they have been extended a lot. Now there is a lot of diversity. Diversity in means differences, complexity means which is not easy to understand, and the globalization of business means from one place they are doing their business to various different places or areas. Now all these three things, that diversity, complexity and globalization of business, they all have made the study of accounting information very important and essential. But dear students, when there are different kinds of businesses and they are in different areas, so all this they are having very different accounting policies, and that all the people, all the businessmen and the parties, they are using the policies according to their convenience. So all these different accounting policies which are followed and the accounting treatment to the transactions and events, they all have made the accounting information very less meaningful, and it is also incomparable. Now what is the need here? So we need some specific accounting standards that should be followed in universally, and that should be applicable universally, so that the accounting statements can be easily understood by the users. Users means both the user that they are making that accounts and the party, those who are seeing that information. Now all these accounting statements, they should have some qualitative characteristics. Now which are that qualitative characteristics? First is reliability, means that the user can rely on that particular accounting statement. Second is relevance. We have already studied earlier that relevance means if if that information result as the useful to the user of accounting information, that time it will be considered as relevant. Next is understandability. Whoever that user of that particular accounting statement, they should properly understand the information which is given there. Last is comparability, means that accounting statements can be easily compared either in inside that firm or outside the firm. For this reason, that an international accounting standard committee, in short it is called IASC, now it's renamed as International Financial Reporting Board. It was set up in the year 1973, and there was some objective for this committee. First objective is to formulate means to create or prepare or organize a plan, to formulate and publish in a public interest. To publish means to prepare a book or to prepare and print a book or magazine. Now that accounting standards to be observed in the presentation of financial statement and also their worldwide acceptance. Second is to work for the improvement and harmonization. Harmonization means that is a process of minimizing redundance. Redundance means which is no longer needed for a particular job. So these standards are, this committee they are having objective so that they can work for the improvement of that accounting standards and for removing the unwanted standards, unwanted things there, so that that particular accounting information can be easily presented. The Institute of Chartered Accountants of India ICAI and the Institute of the Cost and Works Accountant of India, now that is called Institute of Cost Accounting of India, they are the members of this committee. Now, ICA had set up the Accounting Standard Board. In short, it is called ASB in April 1977. And what was the reason? What was the purpose of this board? To identify areas of accounting where the alternative and diverse practices were followed. Means where that many principles were there, so to identify the areas where that accounting, different accounting and its alternatives had been followed. Now they are having purpose to bring uniformity in practice. Uniformity means sameness. Everything will be same. And they have to develop draft accounting standards keeping in view the business environment and the legal provisions of the country, and after discussions with various stakeholders, that is government, industry, federation, etc. Now this ASB, that is Accounting Standard Boards, they draft accounting standard to the council, and the Institute of Chartered Accountants of India, they issue it for the comments of the government, industry and professionals. Now this council of ICA, that is Institute of Chartered Accountants of India, they gives due consideration to the comments received by the amending the draft. Now if it is necessary, then that accounting standards before notifying it, okay, and if it is the case of company, then National Financial Reporting Authority, in short it is called NFRA, an authority under the Company Act 2013, which notifies that the standards to be applicable to companies. Means if it is any company, then accounting standards notified under the Companies Act 2013 are followed. Now we will understand about the meaning of accounting standard. The accounting standards are a set of guidelines, means there are many guidelines which are given, and that is GAAP. GAAP means generally accepted accounting principle, that are followed for preparation and presentation of financial statements. Means whenever that party they will prepare their statements or when they will present their statements, they will follow some GAAP. GAAP means generally accepted accounting principles. Now they are accounting rules and procedures relating to various processes like measurement. Measurement means measuring that particular transaction or event into money terms. Recognition, to identify that transaction. Treatment means how the treatment will be given to particular transaction. Presentation, how that particular transaction will be presented. And disclosure of accounting transaction, and how that accounting transaction will be disclosed to the users. And that will be, and that statements that is issued by the Council of the Institute of Chartered Accountants of India. So here in short we can say that accounting standard is a selected set of accounting policies or broad guidelines regarding the principles and the methods to be chosen out of several alternatives. Standards conform to applicable laws, customs, usage and business environment. Nature of accounting standards. First is accounting standards are guidelines providing the framework so that credible financial statements are prepared. Means they are providing some guidelines which is helping a person to believe on the financial statements. Second, the objectives of setting accounting standards is to bring uniformity, means overall sameness. So this is the objective of accounting standard, that uniformity will be there in accounting practices and to ensure transparency. Transparency means quality of being easily seen through. Mean whichever transaction are there, whichever practices is going on, that can be easily understand by the others, and that can be nothing can be there which has been hidden. Consistency means the quality of always having the same standard. Comparability, the fact of being similar and able to be compared. Third, accounting standards are prepared keeping in view the business environment and the laws of the countries. So means they are timely revised. Now it means that the guidelines change with the change in the business environment and the laws. It is because of this that accounting standards are being revised from time to time. It may be noted that whenever a conflict arises between law and accounting standards, that law will prevail. Fourth is accounting standards are mandatory in nature. Mandatory means that one must do or obey. So these are mandatory. They have to be followed. Fifth, accounting standards have been flexible. Now flexible in the sense that whether where accounting alternative accounting practices are acceptable. As we know that there are many accounting standards are there, so many alternatives are provided to the business or the entities, any of that they can follow. So in this manner they are having flexibility. Let's understand with the help of example. Let's take example of depreciation. There are two methods of depreciation: written down value method or straight line value method. So that entity or any business, they can use any of these method of depreciation. Concept of accounting standards. That accounting standards prescribes the accounting rules and procedures for recognition. Here it is talking about the transaction and events. So it is prescribing some accounting rule for the business. With the help of that, recognition of transaction or events can be done, measurement of transaction, treatment of transaction, presentation of transaction, and that disclosure of accounting transaction can be done. They are prescribed to be followed in preparing and presenting the financial statement, so that the financial statements are based on common rules and principles for the better understanding by the users. As this accounting statements will be maintained by the business and that will be used by the different users, as we are having two types of users: external users and internal user. So that financial statement should be maintained in a manner after following some rules and principles, so that it can be easily understood by the any kind of user. There are some objectives of accounting standard. First of all, minimize the diverse accounting policies and practices with the aim to eliminate them to the extent possible. Now, as we all know that there are many accounting policies which are prevailing there in market, many different kinds of practices is there. So the objective of accounting standard is to minimize the various accounting policies and practices, and they are having aim to eliminate means to remove that is not needed.